Hi everyone, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Let's start off with corn and commercials COT change signals. As usual, you can see we have a 45% change in commercials positions, 44 in large speculators. These changes are humongous, very, very large changes. As you can see on this 52 weeks time range. Of course, this change signal is coming pretty late. As you may see, we had a significant decline last week, and this means that we have to be very cautious taking this signal. Of course, let's jump over to the 5-year chart and see how extreme this market has become with this dynamic change in traders' positions. You can see that we are getting very, very close to bearish COT extreme levels. You may see that the last major or most bearish COT extreme was back over here in mid-2016, and that very well coincided with a top in the market. Right now, we see this decline. Of course, that doesn't mean that this would continue the next couple of weeks. It can, of course, easily. We are getting closer from a bullish extreme part of the market. That was the case a few months ago towards a bearish side right now. I'd skip this market for now and look for other trading opportunities. Let's move on and have a look at the Canadian dollar, where you can see we have this 26% change in commercials positions, 24 in large speculators. It's interesting to see both commercials and large speculators being net short in this market. Only small speculators are optimistic right now. But back to the signals, this means we have a bearish COT change signal. We may expect prices to go and react that inclination we have right now. We may see a bit of a decline in the next couple of days, not necessarily, but of course the change signal is telling us. If you look back over here at this signal, this was a bit larger bearish COT change signal. That was a signal without any effect on the market, so that means you should be careful with this one as well. Of course, jumping to the 5-year chart, you may see that we are pretty dynamically moving away from a bullish COT extreme, which was back over here. You can see how well the market reacted, and we've seen much higher prices. Now we're moving towards a bearish side of the market. Of course, you can see on this 5-year chart that there's plenty of space left to reach those very large, close to all-time COT extreme levels. We're not there yet. In relative terms, well, hey, for 16 weeks we haven't seen such a bearish extreme, but there's of course more space towards the bearish side of the market, which means prices can of course continue their rise. Soybeans is our next market with a 24% change in commercials positions. Again, we're talking about a larger than average change size, but this change may be coming in a little bit late after we had this decline last week. Both commercials and large speculators are currently net long, which means only small speculators are pessimistic about the market. Jumping to the 5-year chart, you can see that we are moving away from a bullish extreme, and you can see we had a pretty nice rise in prices. There's still a lot of space left to reach those bearish levels, so conclusion is this rally can continue if we look at the COT report. Let's move on and have a look at large speculators COT extreme. We've got 3 markets on top of the list, all of them with all-time COT extremes. Let's start with the Kansas City wheat. So we have an all-time COT extreme, a bearish extreme signal. You may see we had a decline, which means this may actually be the end for the rally. And if that's the case, then of course we should expect further decline in this market. That was pretty obvious. Moving on to cocoa, we have all-time COT extreme here as well, not only in large speculators but in commercials positions as well. In this case, we are talking about a bullish COT extreme. You may see we had this huge decline in the market. We're still at very low levels, so the opportunity is out there. You may still enter this market if you wish, and the report is telling us that we should expect higher prices to come. New Zealand dollar is our last market for this review, with an all-time COT extreme, a bearish all-time COT extreme in large speculators and in commercials as well. And prices have not really moved away from this level in the past couple of weeks. The extreme is still there. It has grown to even greater levels. So I think basically in the last 3 weeks, nothing major difference has happened. We can still expect the dollar, the New Zealand dollar, to fall back. Okay, that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.